This is the Money Talks podcast. Subscribe now on iTunes. Listen to Michael Campbell and Money Talks live on Saturday mornings on CKNW Vancouver, 770 CHQR Calgary, 630 Ched in Edmonton, and live on the Radio Player app.
That's Oyo Como Va by Santana. That was the third song played in the short dance by Tessa Virtue and Scott Moyer in their... That was Monday night, but of course Tuesday they won the gold after the free dance. There you have it. We're going to be featuring the music, and a tip to all our Olympians that are featuring the music of Scott Moyer and Tessa Virtue, who provided one of the real highlights of the Olympics for Canadians. Time now for this week's Quote of the Week. It's in the aftermath of the tragic, overwhelming shooting in Parkland, Florida. 17 people died, and obviously not surprisingly, it sparked deep emotions and a lot of focus on gun control and mental illness. I can't even imagine the despair. But this week's Quote of the Week is a long one. It's by a teacher in Lake County, Florida, named Kelly Guthrie Rayleigh, who just last month was named 2017-18 Teacher of the Year. The day after the shooting, she posted on Facebook her views, which she fully understood would elicit hate mail and personal attacks. But she feels very strongly that there's a major missing part in the discussion in the aftermath of the tragedy. As she says, lack of compassion wasn't this bad 20 years ago. 20 years ago, she wasn't afraid to call a parent, but now she knows that when she does, 9 out of 10 will tell her to go to hell, call the school board, badmouth with her on Facebook. All because she let them know what their children or child was doing at school. Because sometimes kids do things that need correcting. But here's the thing, the post is getting toward 1 million views. As I said, it's long, but I think it's also applicable. We've got Pink Shirt Day coming up on Wednesday, anti-bullying. I think this message she has is at least worth reflecting on, whether you agree or not. It should be part of the discussion that merits so much attention. In quotes, until we as a country are willing to get serious and talk about mental health issues, lack of available care for mental health issues, lack of discipline in the home, horrendous lack of parental support when the schools are trying to control horrible behavior at school. Oh no, not my kid. What did you do to cause my kid to react that way? There's a lack of moral values. And yes, I'll say it, violent video games that take away all sensitivity to any compassion for others' lives, as well as reality TV that makes it commonplace for people to constantly scream up in each other's faces and not value any other person but themselves. We will have a gun problem in our school as long as those things persist. Our children don't understand the permanency of death anymore. She goes on to say that parents, it's time to step up. Be the parent that actually gives a crap. Be the annoying mom that pries and knows what your kid's doing. Stop being their friend. They have enough friends at school. My home was filled with guns growing up. For God's sakes, my dad was an 82 Airborne Ranger who lost half his face serving our country. But you know what? I never dreamed of shooting anyone with guns. I never dreamed of taking one. I was taught respect for human life, compassion, rules, common decency, and most of all, I was taught that until I moved out, my life and bedroom wasn't mine, it was theirs. And they were going to know what was happening because they loved me and wanted the best for me. End of quote. Of course, that's the controversial part, asking parents to take responsibility. As I said, and she understands, that's going to elicit a lot of negative response, but I still think it's worth discussing. I'm very pleased to welcome back to the show Aaron Dunn, Keystone Financial. Aaron, great to have you back with us, especially this time of year when we're starting to talk, well, not starting, I mean, we're right in the end of the RRSP season, people looking for that, but also in an environment, we're talking about, raising rates in the U.S. That seems to be the big story every week now. How many times is the Federal Reserve going to raise rates? Now, for Keystone, your part is you specialize in different growth stocks, but with yield. Tell me how that impacts what you're looking for.
So it really, we maintain a very consistent strategy regardless of what's happening in the market. So what we do is we always look at companies from a risk perspective, and we categorize all of our recommendations into different risk categories. So, for instance, we'll have conservative stocks, which are large cap stable companies paying and growing a dividend. We'll have aggressive recommendations. These are also dividend paying companies, but they're smaller cap, higher growth companies, higher risk. And then we have moderate companies as well, moderate risk companies, which are right in between. So when we advise investors to build a portfolio, what we're telling them to do, what we're advising them to do is to build a portfolio based on a foundation of high-quality dividend growth stocks. Build your portfolio on that foundation, and then you can add layers of risk to that portfolio by looking at companies that are higher growth and in some cases more cyclical. Right now, obviously, a lot of attention is on rising rates. The consensus is that rates will continue to rise throughout the year. The economy is doing fairly well globally. Investor risk sentiment is fairly high right now, or investor risk appetite, rather, is fairly high right now. So when you have a situation like this, typically the more defensive names will tend to underperform in that type of environment. But that doesn't mean you don't touch those companies, because investor sentiment changes very rapidly. I mean, literally it can change by Monday. So you want to build your portfolio on that strong base, and then you can add more interesting higher growth names to it from our moderate portfolio, from our aggressive portfolio, and from our small cap and U.S. research as well. So this is the way that we advise investors to build a portfolio long term, and it is essentially been this type of a strategy has outperformed in almost any time horizon when you look at the market.
Now, this throw a little curveball at you, because I was looking at your website, www.keystocks.com, and I see that you're doing a series of seminars coming up, starting in Toronto on March 1st, but you're going to Calgary March 6th, Edmonton March 7th, then you're coming back into British Columbia, Kelowna March 8th, you're going to Victoria March 13th, Langley March 14th, Vancouver March 15th. There you go. You can go to the website for getting details on that. But you're talking about this very thing, is building a portfolio. And I'm thinking about this because we're coming up to the end of RRSP season there. You've just given us a kind of hint at the kind of things you'll talk about in that seminar, which I think are essential tools to be successful. Let me ask you this, though. Is there something like how many stocks you should own? And I know this is an average question for sure, and it's a broad question, but do you have kind of rule of thumb, and do you talk about when to buy a stock and when to sell a stock in that in that seminar?
Yeah, that's exactly what we're doing. What we want to do is we want to help people become better investors. And a trend that we've seen for many years, and it's just growing, is that people want to take more responsibility over their own financial future. In some cases, this is a choice. In other cases, they have no choice because they just have not gotten good results from mainstream financial advisors. So what we are doing in this seminar is we are arming individual investors with the tools to build and manage their own portfolios, sometimes completely independently and sometimes with help, like what we would provide at Keystone by providing the actual individual stocks to buy. But basically what you said, you hit the nail on the head there. You have to understand, you have to start off with, what type of a stock am I looking for? What type of what marks an opportunity? What type of risk should I avoid? But, from a logistical perspective, how many stocks should I own? When is a good time to buy? How do I layer into a position of a stock? How do I manage my portfolio over time, and when do I sell a stock? So they're very simple tools that we can provide in investors, which will help them to really avoid a massive amount of the risk that ends up hurting retail investors over time. So we started these seminars last year. We got an absolutely amazing response from the investors that came. We got about 3 times as many people or more than we actually expected, so we had to expand the seminars as well. And then based on the feedback that we got from people, which was almost all positive, we've essentially re-engineered the seminar, and we've added new content, we've improved existing content, and we're really passionate about arming people with the tools so that they can take care of themselves financially.
Give me an example of a company that you look at right now.
Okay, so one company that I really like right now, I think it's extremely unique, is Sylogist. The symbol is SYZ. So this is a growing small cap technology company. It also pays a growing dividend. Trades for about $10 today. We recommended it at $7.80, so up about 30% from the original recommendation price, but we still see plenty of upside from here. They're a software company. They develop and license software to customers, mostly in the public service sector. About 70% of revenues are recurring. What makes them unique in this market is that they have growth, they have a cash-rich balance sheet, and they're trading at an attractive valuation relative to earnings. So that kind of investment is incredibly difficult to find right now. But we just recently updated the company after they released their strong Q1 results. They grew their adjusted earnings per share by 45%. They ended the quarter with $1.25 in net cash per share, and they increased their gross profit margins to 76%. For 2018, they're expecting to grow earnings per share again by about 40%. And if you look at this company's historical track record over the past 5 years, they produced revenue growth average over 5 years of about 29% per year, and operating income per share growth about 24% per year. So excellent track record, excellent growth right now, and trading at about 14 times current year's earnings. So that's a discount to the market, but it's a huge discount to comparable companies with similar characteristics in the software space. Right now, they're paying a yield of about 3%. They increased the dividend last November by 14%, and they've doubled their dividend over the past 5 years. So this is a company we like right now. We think that there's excellent income in the future, and we think that there's excellent share price appreciation in the future.
Let me just back up to something, and I know, as you alluded to, but I always liked about your service is that you categorize in terms of risk. So how do you categorize a company like that? What category is it in?
We categorize Sylogist in our aggressive category, and the reason why we put it in there is because it is a small cap company, market cap of about $220 million, so that's fairly small. And then compared to some of our conservative companies, that makes it more thinly traded. So it's one of the reasons why it's trading at such an attractive valuation is because it's a smaller company and underfollowed and doesn't have any mainstream analyst coverage yet. But we've seen these types of stories play out before, and as the company continues to grow, generate success, and revenues go higher and higher, institutions start to notice, and that's what drives the valuation up and the share price as well.
I'm talking with Aaron Dunn, keystocks.com, keystocks.com, Keystone Financial, a series of seminars coming up. What a great example, though, of getting sort of some foundation. I get asked that all the time by people. How do I start? Well, this is a great place to start. Calgary, March 6th, Edmonton, the 7th, Kelowna, the 8th, Victoria, the 13th, Langley, the 14th, and Vancouver, the 15th. Information, go to keystocks.com. I'll take a break. I'm going to put him on the hook for another couple. I got a lightning round for him, too, but I got Aaron Dunn. I'm going to ask him for another couple of examples of things he's looking at today that you can put on your radar when we come back on the Money Talks Network. I never meant to call you in your sorrow. Just wondering what your favorite Olympic event to watch was. I've been glued to the TV, but I certainly was a monster highlight was the Tuesday night performance. But that's Purple Rain by Prince. That was in their program a year ago, 2016-2017 season. And, of course, where they won so many awards, I can't even get through them. I think they were first in every single competition they entered. That's Tessa Virtue and Scott Moyer in the ice dance. Aaron Dunn's on the line with me. You can find him at www.keystocks.com. That's where you also get details of their seminars coming up. Aaron, you know me. I want to get some more ideas from you that we can put on our radar. Give me another one.
Okay, so the next company is Algonquin Power and Utilities. The symbol is AQN. This is what we would consider one of our very stable long-term dividend growers. So when I say that investors should build a portfolio on a foundation of high-quality dividend growth stocks, this is essentially what I'm talking about. For disclosure, I own this myself as well. It's the utility and power generation business. We recommended it about 6 years ago. It's more than doubled. It's paid back investors 50% of the original purchase price in dividends, and it's paying a yield of 4.6% per day. So this is a company that has been growing at a double-digit rate, earnings per share at a double-digit rate, dividends at a double-digit rate, and that is expected to continue. This is all based on investments into developing new projects and acquisitions. They also recently announced a new international expansion strategy. But it's one of those companies, in spite of it being a very stable utility-style business, it's also an attractive growth stock to us because it's something where you can sleep at night. All of these revenues and cash flows are based on long-term contracts and regulated rates of return, but they're finding ways to grow that in the double digits. So they're expecting 16% growth in earnings per share over the next several years, 10% dividend growth. This is another keeper for us.
What's the symbol on Algonquin Power?
It is AQN.
Okay, I don't want to run out of time. Give me just one more.
Sure. So EBIX, this is from our U.S. research. It trades on the NASDAQ exchange. Another technology company. They do software for the financial industry. They 17 years of straight growth. 80% of revenues are recurring. It's a global business, global footprint, and they've been extremely active in the acquisition space. So they recently completing an acquisition of a company called It's Cash, and that is giving them entrance into the payment and money transfer industry in India, where they see a huge opportunity. But lots of opportunities for this company. Excellent historic growth, excellent growth outlook going forward, and trading at about 23 times current year's expected earnings. So that is a very attractive valuation for stocks with these financial characteristics in the U.S. market right now. So we love this company over the next 1 to 3 years.
EBIX is a symbol. Aaron, great stuff as always, and those are things that we can put on our radar, check that it's appropriate for our own portfolios. And again, if you don't know about your portfolio, we'll go to the seminars. I'll give you the details in a second. But it's time now for the lightning round with Aaron Dunn. Are you all set, Aaron?
I'm all set.
Okay, first big investment win.
I believe it was Sleep Country Canada back when they were an income trust.
A favorite long-haul airline.
Air Canada. I like the planes.
Favorite movie star growing up.
Arnold Schwarzenegger.
Favorite Olympic sport to watch this year.
Well, I'm always going to say hockey, but I say that with some disappointment this year.
Which Olympic sport scares you the most if I had to make you try it? Would it be snowboard slope style or skiing aerials?
I'm pretty sure I'd be equally dead trying either, but I would say skiing aerials.
You're right, by the way. Both of them have an over 30% chance of injury when people have done them over the last 3 Olympics when they've been appropriate. Most fun fiction book you've read in the last 5 years?
Thomas and Friends, The Great Race, and yes, that is a book for toddlers.
I was just going to say, there you go. Best subject in high school. What were you good at?
I was good at math. I also really liked history.
And financial worry that keeps you up at night?
The tendency for a lot of people not to learn from their mistakes and then blame something else when things go awry.
We could apply that to politics. Most Absolutely. Interesting market in 2018?
I like a lot of different markets, but I like technology right now, especially in the States. Lots of opportunities, I think, long term.
And now, a pet, your choice. Dog, cat, canary, or goldfish?
I like dogs, but for logistical reasons, goldfish.
I was just going to say, there you go. Your favorite dessert if you're going out for a big night?
Ice cream cake.
Oh, ice cream is just a weakness for me, by the way. And your favorite financial show on radio?
Oh, you know I love Money Talks with Michael Campbell.
There you go. Aaron, thanks for taking the time. I just want to stay with me. I want to remind people that you're going to be, again, give those dates out. March 6th in Calgary, March 7th in Edmonton, Kelowna March 8th, Victoria March 13th, Langley March 14th, Vancouver 15th. You know, I'm really glad you guys are doing this. And the reason is straightforward, is that the more information we get, this is foundational stuff, how you approach the markets. As I say, all those questions you alluded to earlier, I think that's just key stuff. You do a great job. And again, you just have to go to keystocks.com and sign up, Aaron?
Yes, absolutely. Just go to keystocks.com. All the information is there. You can call into the company as well. We can help you out, but you should be able to sign up, no problem, on Keystocks. Well,
great stuff. I know it'll be a good seminar. Aaron, thanks for finding the time with us.
Thank you, Michael.
Okay, we've got to take a break. I'm going to come back, though. I've got my shocking stat of the week. And just a reminder, by the way, speaking of websites, to go to www.moneytalks.net, moneytalks.net, or go to Facebook, Michael Campbell's Facebook, Money Talks, rather, on Facebook. A big shout-out, though, to Kenneth Kyle and Steve Heslop, who reached out to us via Facebook. Glad you're doing that. I'm glad you're accessing all that information on a regular basis. The thing I would love, though, is if you tell your friends, if you've got children or grandchildren, it only takes a few minutes, and really we can help with raising the sophistication of Canadians. I'll take a break. I'll come back. Shocking stat, Victor Adair, and wait till you hear the goofy.
You lift my heart up when the rest of me is down. You enchant me even when... That
is called Latch. That's by Sam Smith, but it was in the 2016-17 season music for Tessa Virtue and Scott Moyer. We're celebrating them, but we're also celebrating all our Olympic athletes. Amazing record performances, nonstop, personal best, everything. Talk about being the best of what Canada has to offer. Tremendous stuff. By the way, think about this as Virtue and Moyer's season in 2016-2017, where that music was used. They won the Grand Prix final. They were first. NHK Trophy, they were first. Skate Canada, they were first. Autumn Classic International, they were first. What a track record, the most decorated ice dancers in Olympic history. Time now for this week's shocking stat of the week. You know, one of the aspects of actually having the privilege of doing this, of broadcasting, that you might be surprised about is the amount of hate mail I get for just simply stating facts. Now, I appreciate if it was opinions. Opinions can differ, and that some people have huge amount invested emotionally in their opinion. Many times their identity gets wrapped up in them. So I'm not surprised when I get a negative reaction if I say something that threatens that opinion. But I have to admit, I was, especially at first, I was taken aback by having that kind of negative reaction, that emotional reaction, when I simply present a stat. Which brings me to my two shocking stats of the week as I wade into the debate surrounding oil. The first, 6,000. That's the number of products that are produced with petroleum, according to the United States Energy Information Administration. About 60% of petroleum does end up in gasoline or jet fuel heating oil, but there's so much more. For example, in the medical area, transplant tape, artificial limbs, heart valves, anesthetics, antihistamines, are all made with petroleum products. Many more are made with petroleum, rather. Also, things like life jackets, fertilizer, insect repellent, ink, contact lenses, eyeglasses, plastic roofs, roofing material, and so on. Plastic wood, I should have said, and so on. So if we end oil production, we either need to find substitutions for those kinds of products, 6,000 of them, or square off those products altogether, as well as gasoline, heating oil, and jet fuel. That never seems to be part of the discussion, by the way. Speaking of substitution for oil, this is the second stat, and it's courtesy of the International Energy Agency World Energy Outlook 2017. How much did solar and wind provide in terms of the world's energy use in 2016? Well, the answer is this, 0.8%. It's maybe more surprising, though, as we're going to spend trillions of dollars in taxpayer subsidies on solar and wind. But by 2040, the International Energy Agency predicts that it will still only provide 3.6% of the world's energy. In other words, the use of fossil fuels is going to drop from currently about 81% of the world's energy to 75%. I thought that was interesting. Trillions of dollars later, you only really move from 0.8% to 3.6% by the year 2040. I think facts are important when you have a discussion if you want to at least make it realistic, and I think those are two very pertinent facts as we talk about the end of oil. Hey, just a reminder, go to moneytalks.net. Lots of great articles on it. The most popular article this week you can still get is Rising Interest Rates in the Coming Banking Crisis. That was by Martin Armstrong. Great track record, by the way, in what's been going on in the market, this thing, the rising interest rates, impact on pensions, Europe, all of that stuff. But he sees another banking crisis coming. And take a look at the new radical bank rescue policy. That's not great for taxpayers, by the way. We also have Jack Crooks. He's talking about the next big 8-year bull market. He talks about it in 3 charts. All of that, you can just go to moneytalks.net. It's absolutely free. You can sign up for the free email service. You get access to these training videos, and of course I'm big on that, on the training videos. So take advantage of it, especially if you're watching from snowy Vancouver, for example, or Abbotsford, or Chilliwack, or Victoria, you know, the cold winter in Edmonton and Calgary. Hey, great thing to do. Make some good use of the time there as you're enjoying the winter weather. I'll take a break. I'll come back. Victor Dare, lots to talk about. Plus, I've got a goofy coming your way, so stay with us right here on the Money Talks Network.
I won't let go of that you circled in my embrace.
Stars shining bright above you. Night breezes seem to whisper, I love you. Birds singing.
That's the music Scott Moyer and Tessa Virtue used in the 2013-14 season. They came second in 2013's World Championship. From that point on, I think it was number one in everything they did. Every single little thing they did. That's Dream a Little Dream. Louis Armstrong, Ella Fitzgerald, part of that thing. I think the music makes a big difference, by the way, whether you're watching the pairs or the individual skating, which has been one of my favorites watching. Artistic, athletic, my goodness gracious. Victor Dare joins me on the line right now. Hey, Vic, I was just wondering, looking at the rally in the Dow Jones, I think that the big question that people have is we've seen the big decline for about a week after the high in January 26th. Now we've had a nice week and a half where it's been pretty solid or very strong recovery. But is this kind of like what you'd call a dead cat bounce? Are you more? Should investors still be nervous here, or is it all clear as far as you can see?
Well, certainly it depends on your time frame, doesn't it?
Yeah.
I mean, if you're looking to put a trade on between now and next week, that's one thing. If you're looking to step up, like I heard you talk with Michael Levy earlier about Warren Buffett, he's got, with his tax refund or whatever it is, $140 billion he's looking to put to work. But I think the reason he isn't buying anything is because he doesn't see, real value here. I mean, here's the thing. I mean, from the lows we had in 2009, that's 9 years ago, the Dow Jones has quadrupled. And actually a good chunk of that has come since Trump's election just 14 months ago. The Dow's up 45%. And when I look at the chart, and I just look at the chart, and you don't put a name on it, it could be anything. It's been kind of a parabolic rush to the highs that we had in January, and then a break. So certainly the big question is, so where do we go from here? I mean, I'm agnostic. I'm just a trader. I want to be on the winning side. I could see it kind of going either way. I'm inclined to think this parabolic rush that we had to the all-time highs in January, we fell back 11, 12% very quickly and bounced from there very quickly. I'm thinking that this parabolic rush just on the charts maybe signals a top, or at least a brief top. And the fundamental story in behind that is that I believe that what underwrote that 9-year bull market we've had in stocks were very accommodative, call it easy money, policies from the different central banks around the world, and that appears to be changing. And I think that changes everything. So I don't think we've escaped the call it correction phase here, but we had the market close right on the highs of the week yesterday. So we could trade a little higher yet. I have no position. I'm just waiting to see if I can get a sign, and I could go either way.
Yeah, it's interesting you're saying that. I was looking at polarfuturesgroup.com where you have a lot of your stuff, and I was very interested. I thought it was worthwhile to talk about your thoughts about oil, because as you say, you've got sort of a negative bias on oil, but you thought you were missing something, and I love your response. So you just said, I stepped aside.
Yeah, well, Joseph Schachter's been a very good friend for the last few years, and I've done very well since 2014. I mean, gosh, that's 4 years ago, isn't it? In trading oil from the short side. I've missed some runs to the upside, like the one from last summer to last fall. I thought oil was sort of as good as it gets when we were in January, and I caught a chunk of that real sharp break we had in oil as it fell along with the stock market. Actually, what it fell with was just this almost a sea change in investor appetite. Investors went from being very aggressive about taking on risk to being very shy, and that showed up in the currency market, the credit markets, commodities and so on. But with crude, it has bounced back more strongly here the past 2 weeks than the stock market has. And I had started this week with a short position in crude, and I'm looking at it and I thinking to myself, this isn't working out. So I just liquidated the trade. I lost some money in the trade. That's part of the game. This week I started this week past, short of Canadian dollars and short of gold. I mean, I got about a $30 move on gold in my favor, took that, and we got a good move in Canada, so I made some money on those things. But the crude oil did puzzle me, and I thought, I'm missing something here. There is an aggressive bid in this market. Why is that? I don't know. You look at the share prices, certainly of Canadian oil-producing companies, they're in the dump. But there was something going on in crude, so I just said, I don't understand this. I stepped aside. Mike, the market that's really got my interest right here, right now, is the euro in particular. It is up 20% or so since Trump's election. There is a massive bullish position from speculators in the euro. In other words, people are betting a huge amount that it's going to continue to go higher. And it's gone up even though the interest rate premiums that you get paid for holding U.S. dollars are nearly 3% higher than German rates. So here's the thing. if the market, and then the euro did fail here a couple of weeks ago at about 125, if the market comes to see that maybe 125 was the high, maybe everything in Europe doesn't look so rosy, and the market starts to slip off a bit, I could see the euro really taking a skid down, or the flip side of that is the U.S. dollar rallying.
You know, I want to come back to your point, though, and because I certainly do it all the time. As my uncertainty grows, I step aside of the market, and there's nothing wrong with that. There's always other times when, let's say, the factors you're identifying are lining up more in your favor. It's more convincing. I'm with you on the euro, by the way, but I was surprised in the euro's rise above about 118, 119 into 125. I thought we'd get that bounce, that first bounce, and then it went, as you always tell us, it's going to go further than you think. Well, it sure did. But, yeah, I'm still fascinated with the euro. It doesn't make sense to me, as you say, when you can get 3% more by having U.S. dollar treasuries than you could, you know, a negative interest rate in Germany, for example. You know, I'm puzzled by that move. But it's great advice, as you say, when things aren't lining up the way you expected, then, hey, there's nothing wrong with just standing aside for a second on that one. Just back one more quick word here, Vic, back to the Canadian dollar for a second. What are you seeing there? Because it was quite unusual. It was weak, you know, compared to the U.S., while other currencies were making a little more progress against the U.S. dollar.
Okay, very quickly, there's three key drivers to the value of the Canadian dollar. The first is the relative strength or weakness of the U.S. dollar. The second is the interest rate spreads between Canada and the United States. And the third thing, just call it commodities generally. So if commodities are in a bull phase, probably the U.S. dollar's in a negative phase. So there's two things that would line up for Canada. Right now, and I've been trading Canada mostly from the short side. Canada, and I'm gone home here this weekend short of Canada. I came into the week short, took some profits on that, and then re-shorted Canada when it bounced on Friday on the CPI. Canada has been, I think, ignoring the Canadian dollar has been absolutely the most dominant thing has been the relative strength or weakness of the U.S. dollar. You can almost see Canada following the euro currency around like a puppy. You know, when the euro trades up a little bit, and the Canada follows it, and vice versa. I think Canada is a little weak then, but, and here's the but, it's ignoring the interest rate spread, which is in the U.S. dollar favor, and it seems to be, I think, looking at crude oil and getting a little bit of a bid from crude oil. So I'm short Canada, but if it rallies more as we come into early next week, I'm gone.
We'll be there to watch it, Victor. Thanks for taking the time. Enjoy the snow in the weekend.
Thanks, Mike. Good to talk with you.
I'll take a break. I'll come back. I got a Goofy Award for you. Stay with us for that one.
Just hold me tight and tell me you miss me.
Tears in My Pillow, Little Anthony. Virtue and Moira used that in the 2003 Canadian Championships. They were 16 and 14 years old, the Canadian Junior Championships. They finished 7th that year. They also went to the Junior Grand Prix in Croatia. They finished 4th, but of course, as people well know now, that they've been skating together for 20 years. And that's appropriate for my Goofy Award here in this way. Before I get to the Goofy, though, I say it's appropriate this way. Let me say I have loved the Olympics. As I said, I've been glued to the TV every night. I'm thrilled with Canada's success. But you know what? I'm more impressed with the character, the spirit, excellence of our Canadian athletes. And what I'm about to say as my Goofy doesn't reflect or change any of that. But I do believe it's richly deserves and comes within the context of the casualness so many people treat repressive regimes. Now, you know, apologists for Venezuela's human tragedy. I'm still astounded. I actually am frightened by the laudatory remarks made by Prime Minister Trudeau and the NDP's Jagmeet Singh on Fidel Castro's passing. I'm appalled by the percentage of young people who favor socialism and are willing to sacrifice free speech. So maybe I shouldn't have been surprised by the events that sparked this week's Goofy, which goes to stalwarts of the American media for their fawning over the appearance at the Olympics of Kim Jong-un's sister, Kim Yo-jong, who's in charge of propaganda in North Korea, including public executions. CNN's headline, Kim Jong-un's sister is stealing the show at the Winter Olympics. The Washington Post couldn't get enough of her, in quotes, couldn't get enough of the captivating woman who's so high up in that repressive dictatorship. The New York Times seemed giddy in announcing she didn't even need words, only smiles to outflank VP Mike Pence. North Korea is arguably the most repressive regime in the world. You don't have to look any further than those North Korean cheerleaders at the Olympics, who defectors tell us have no choice to be there. They're under 24-hour guard. And I think this is very telling in the age of the hashtag #MeToo. They are forced to perform sexual acts at the whim of Politburo members. By the way, North Korean athletes are under 24-hour guard at the Olympics. I'm going to leave the final word, though, to former world chess champion, Garry Kasparov. He's now chairman of the New York-based Human Rights Foundation, who recently wrote in the New York Times, North Korea hasn't, quote, taken this opportunity to stage one of history's great whitewashing operations, where the breathless focus on the fashion style of the dear leader's sister instead of his forced labor camps and police state. Pardon my coughing, I'm going to do that again. North Korea has, in quotes, taken this opportunity to stage one of history's great whitewashing operations, where the breathless focus is on the fashion style of dear leader's sister instead of his forced labor camps and police states. I mean, North Korea is again, the worst human rights violator on the planet. I mean, its leaders, including the spiraling Kim Jong-un, are active participants in a totalitarian state that starves, abuses, and brainwashes millions of people. End of quote. And that's the regime so many in the media have turned a blind eye to. Maybe because they thought it was a way to get back at Donald Trump, or even more depressing, that they take our freedom so much for granted that they become insensitive to the repression of others. Pardon my coughing there, but I think this is worth noting. This casualness we have for repressive regimes. How can you do anything but put that front and center? That it's an incredible human rights violator. There's nothing to celebrate about Kim Yo-jong, who's an active participant in a state that starves, abuses, and brainwashes millions of people. Maybe that's the latest thing to do. But as I say, you got to keep these things under control. Just a reminder to go to moneytalks.net, and a reminder to go to www.keystocks.com, get the details of what they're about to do with their seminars coming up in the variety of, including Edmonton and Calgary and Langley and Vancouver and Victoria and Toronto. And in the meantime, I want to my thanks to Amir Ali. Done another great job making sure everything goes smoothly, except for he can't cure my coughing at this moment. Done a great job again, makes this show go. And I hope you go out and have a terrific weekend. Thanks for listening.